Good day once again. This is financial accounting.
Hold on, lights. On the lights. Yeah. Very nice.
I will get used to our work. Good day once again. This is financial accounting, and we shall look at the topic accounting treatment of control accounts. What you all know as control accounts and a self-balancing ledger. The first thing we need to know is what is a control account. Control account is an account prepared to determine amounts owed by debtors and amounts owed to creditors. You can see we have two important people that this account deals with. This account is a self-balancing ledger to determine the amount a business organization is owing its creditors and the amount a business and the amount customers are owing the business organization. Debtors are buyers and customers of the business organization. Creditors are the suppliers and sellers to or of a business organization. So the amount a business organization is owing the creditors will be shown in the control account. The amount a business organization, the amount customers are owing the business organization will also be shown in the control account. So control account is useful because it helps to detect errors. Alright? It also helps to prevent errors. It aids the preparation of final accounts. Alright? The final accounts, your trading profit or loss accounts, your income statements. You use your control account to determine some values that will be needed there. Control accounts also used to determine missing figures in the books of accounts, just like your credit sales and other values in the books of accounts. So it's a very important account, and it is a self-balancing ledger because at the end it will balance itself. Alright, so right now let's look at the types of control accounts. So under the types of control accounts, we have two. We have the sales ledger control account, and the other one is the what? Purchases ledger control account. Let's look at them one after the other. Number one is the sales ledger control account. Sales ledger control account is a type of control account that is prepared to determine the amount owed by debtors or customers or buyers of a business organization. So the balance in this account will show us the amount owed by debtors. So it can also be called total debtors control account, and it has a format which is not difficult. The format is like this, like that. I'm going to give you ways to remember the values in the format. If this is our total debtors control account, this account is for debtors. Therefore, any transaction that will be recorded in this account has to deal with what? Debtors only. Alright? Now, anything, debtor is an asset, current asset. Debtor is current asset, which makes it an asset. Under the rules of trial balance that we discussed in our previous lessons, assets are debited. So this account has a debit balance. Anything on this debit side will increase the amount a customer is owing an organization. Anything on the credit side will reduce the amount a customer is owing an organization. Don't forget that item posted to this account has to do with items relating to debtors or customers. Then what will determine what will be on the debit side will be, will that transaction increase the debt of customers? It will be on the debit side. What will determine what will be on the credit side? Will that transaction reduce debt of customers? It will be on the credit side. So therefore, the items that will be posted to this account will relate to customers' transactions only. Now, let's say we have a balance brought forward like this, and we have balance brought forward like that. Alright? Things that will increase the debt will be credit sales. Okay? Things that will increase the debt will be what? Interest on overdue amounts. Things that will increase the debt will be what? Discounts. Discounts disallowed. Another thing that will do is carriage outward. It will reduce the debt. It will increase the debt. Another thing that will reduce the debt is what? Is debit note issued. It will reduce the debts. It will increase the debts of customers. Okay? Now let's look at things that will reduce the debt of customers. Number one is cash received. It will reduce the debts. Check received will reduce the debt of customers. Alright? Discounts allowed. Discounts allowed will reduce the debt of customers. Returns inward. Returns inward will reduce the debt of customers. Bad debts written off. Bad debt written off reduce the debt of customers. Bills receivable reduce the debt of customers. Credit notes received reduce the debt of customers. Okay. We have another thing that can reduce the debt is what called set off or contra account. This occurs when a customer is owing an organization and the organization is also owing the customers. So they are going to set off their debts. So whoever is owing higher amounts will the difference. Whoever is owing higher will pay the difference. So here I have balance carried down. And I have the value here. Here I have my balance carried down. Here I have balance brought down. Here I have my balance brought down. Okay, so here we talk about this is our sales. The number 2 is purchases ledger control account. Purchases ledger control account. Purchases ledger control account is a control account prepared to determine amount owed to suppliers or creditors. So it is used to determine creditors' balance. Just the way debtors control, total debtors control account is used to determine debtors balance. This one is used to determine creditors balance. So it can also be called total creditors control accounts. And the formats, just as like we said earlier, creditors is a liability, and liability has credit balance from the rules of trial balance. So anything on the credit side here will increase the balance of amount owed to creditors. Anything on the debit side will reduce the amount owed towards creditors. Right now, let's look at the format. Balance brought forward. We have balance brought forward. Okay, so anything here will increase the debt, such as credit purchases will increase the debt, such as carriage inward will increase the debt, just such as interest on overdue payments to suppliers. It will increase the amount. Now anything on the debit side will reduce the amount owed to creditors, such as cash paid, alright, such as check paid, returns outward. We have discount received. Okay. We have discount received. We have bills payable. So here we have bills payable dishonored. It will increase the debt of creditors. So here we have what sets off or contra accounts. So these values, they are always the same. This set off here is always the same as this. So we have a balance carried down. We have balance carried down. So we have a balance brought down. Balance brought down. So with this, we know the reason for preparing a total debtors control account. We know the reason for preparing a total creditors control account. In control account, there are items that must not be posted in a control account. What are these items? There are items that must not be posted in control accounts. What are these items? Items not needed in control accounts. They are, number one, we have cash purchases. Because when we determine the amount owed to creditors, we don't need cash purchases. Cash sales, we don't need cash sales. Bad debts recovered, we don't need bad debt recovered. We don't need bad debt recovered. We don't need any provision for bad debt, bad or doubtful debt. You ignore all this. Provision for discounts allowed and discounts received, etc. It must be removed. Alright, all this must not be posted. So with this, we can solve questions. So right now, it's time to solve questions. Thank you. Yes, this is a standard question for control accounts. So we are going to look at this to test the principles we have. Alright, now the following balances were extracted from the books of Top Performers International Limited as at 31st December 2015. We have opening balances down to bills payable. So we are told to prepare sales ledger control account and purchases ledger control account. Alright, now if you are to start with, don't forget your format. Okay, let's start with the first one. What are we preparing account for? We are preparing account for Top Performers International Limited. So I have Top Performer International what? Limited. So I have it like this. Then I'm going to start my number 1, which is sales ledger control account. Goes like this, like that. Then I have here as my purchases ledger control account. Don't forget, here's my credit side, here's my debit side. Here's my credit side, here is my debit side. We have the transaction. Don't forget, it's not all transactions given that will go to this control account. Don't forget there are some transactions that you don't need. Just like I said earlier, cash transactions, you don't need them. Provision for bad debts, bad debt recovered, you don't need any cash sales or cash purchases. Here we are told opening balances, debtors. Remember, your sales ledger control account has a debit balance, so your opening balance will be on debit side. Balance brought forward. So my opening balance will be on the debit side, which will be 4,000. Gone. Then opening balance for creditors will be on the credit side. Balance brought forward, which is 3. Balance brought forward, which is 3,300. Then we have purchases on credit and in cash. We don't need this, but we use this. Purchases on credit. And purchases on credit has to do with purchases ledger. It's going to increase the debt. We have credit purchases, which is 16,500. Sales. We have on credit and on for cash. We don't need cash sales. We'll pick our credit sales, which will be here. Our credit sales will increase the debt. We have credit sales. The value here for credit sales is 25,500. The next is payment to creditors. Payment to creditors has to do with suppliers, creditors. It will move to our purchases ledger control account. And payment to creditors will reduce the debt. It's 15,000. So here we call it cash paid. Okay, payment to creditors, it will be 15. It is 15,000 naira. Receipt from debtors. You can see it has to do with debtors, control accounts. It will reduce the debt. It will be here. Cash received. The value is 23,600. Cash discounts allowed. Discount allowed will reduce the debt. Discounts allowed. The value is 540. Cash discount received. Discount received will reduce the debt owed to creditors. Discount received. The value of our discount received is 400. Is here. Trade discounts allowed. Trade discounts. For trade discount to be given, that means you are paying cash. We are trying to know the amount owed by customer. So we are talking about amount owed. So trade discount is given when customer has paid without owing. So we will disregard trade discounts because cash discount is given based on the indebtedness of a debtor. So we discard trade discounts. Returns inward reduces debts of customers. So we have our returns inward. The value of our returns inward is 760. 760. Returns outward is 215. It will be here. for our creditors, returns outward 215. Whenever you are solving question on contra accounts, open the two accounts. Don't finish one before the other. As you are picking the transaction, post so you not do mistake and you not record the particular transaction twice. The next is contract settlement. Contract settlement, just like the format I gave, it will appear on both sides. It will reduce the debt of the customer and the debt of customer and debt of supplier. Alright, so here we have our contra account, which is 500. So here we have what? Contra account 5. It will appear on both sides. Bad debt written off. It will reduce the amount of customers' debt. Bad debt 85. Provision for bad debt. We are going to disregard this. Alright. Bills receivable. To reduce customers' bills receivable. It will reduce customers' debt, which is 600. Check dishonored. It was not stated whether it's by customer or check. You assume it is by customer. So you have here check dishonored. So we have 45 because to increase debt of customer. Then we have bills payable to reduce the amount owed to creditor. Bills payable. We have 1020. So we are required to prepare. So we are going to determine the balance carried down for both. So for the debit side, we have 4,000 plus 25,500 plus 45. We have something like 29545. Let's look at the credit side. We have 23,600 plus 540 plus 760 plus 500 plus 85 plus 600. So here we have a lower value. So what we have here is 29,085. Let's remove this lower value. So what we have here is balance carried down is 3,000. So if you add this 3,000 to this, you have this value. So this one is balanced. Let's determine the total here. We have 15,000 plus 400 plus 215 plus 500 plus 1020. Here we have 17,135. Let's check what we have here. 33 plus 16,500. Here we have 19,800. That means here is greater. So what we have? 19,800. 19,800. Let's remove this value. So our balance carried down is 2665. So we've gotten the balance, we've gotten the balance. So with this, we can solve any question on sales ledger control accounts and purchases ledger control accounts. Thank you.